Hello everyone, a very good afternoon. You're watching Market Fatafat on ET now with me, Mubina Kapasi. Markets taking quite a knock. We have the Nifty and the Sensex both declining in trade by a very huge quantum. In fact, down by almost about 0.9% in trade. A big fall seen over there. We do have, in fact, all of the indices as well that are declining. Auto, metals, these are among your top sectoral losers. But before we kickstart Market Fatafat, let's first connect with the management of Tech Wabag. The company has delivered quite a robust set of numbers in the third quarter. Not just that, they've also managed to bag a good 760 crore rupee order. So to talk about that, to talk about the order book, we have with us today joining in from Tech Wabag, Rajneesh Chopra. He's the Global Head of Business Development. Mr. Chopra, thank you for joining in on ET Now. Let's start off first with what was the traction from the budget for Tech Wabag. There were various water-related yojanas that were implemented by the government. I think clean water has been one of the pet projects of Modi government, especially NDA2. So how do you read into the budget announcements?
From the budget point, I think in the history of independent India, this is the first time when the government has taken an initiative to provide Nal Se Jal and has announced 3.6 lakh crore under the Jal Jeevan mission. So we believe for Tech there is a substantial opportunity when it comes to technology and treatment of water, because we believe that to fulfill this mission, all sources of water needs to be treated and provided to the citizens of the country, be it desalination, be it recycle, reuse, be it even conventional water treatment. So I feel that, for water treatment, probably going ahead, 2-3 years are going to be very exciting. The second thing is that when it comes to wastewater, I think one of the major initiatives which Jal Shakti Ministry has taken is that earlier there was National Mission for Clean Ganga, where we had all the projects only related to Ganga River. So now there were certain rivers which were earlier part of NRCD, which have been given to National Mission for Clean Ganga. So we believe that in coming months they will come up with a blueprint, and as per NGT directive, all the wastewater, the municipal wastewater, before it is discharged to these rivers to keep them pure and flowing, will be treated. So on both the accounts, we see a substantial opportunity over the next 3 years for Tech Wabag.
All right, excellent. Now, Mr. Chopra, you just bagged a 760 crore rupee order. In fact, it was a cumulative value of multiple orders. If you could just break that up for us, and also what kind of projects are they? How are they different?
See, we have got the biggest order for ourselves, which is in Switzerland. For our Swiss entity, this is their biggest order ever. And this is, about, water treatment. And apart from water treatment, this is the first time they are going to, remove the micropollutants. Switzerland is the first country which has gone for the high technology for removal of micropollutants. So they are going to remove the micropollutants. Another contract has come from Bhagalpur, which is in Bihar, which is again a water treatment and development of water treatment system is there. These are the two major orders which are there. The third one is from Coimbatore, which is again a water treatment plant.
So, Mr. Chopra, clearly, I think winning orders does not seem to be a problem for the company. You have a nice big order book of 11,500 crore rupees. But I think executing it timely and efficiently seems to be more focus may be required. So how are you working on that? I mean, how is the company ensuring maximum output?
Currently, the focus of the management with a strong order book, which is 11,500 currently, the shift is definitely towards the execution. If you see, at our Q3 point, quarter on quarter, our execution has been improving. And we had given a guidance of 3,000 crores, and we are pretty confident in the last quarter we'll be able to do 1,000 to 1,200 crores, and we'll be very closer to our guidance, whatever we have given. Secondly, in terms of our debt, one of the major thing, if you see, in 9 months, we have a substantial reduction in the debt of around 275 crores. So working capital management has improved drastically, and our EBITDA margins based on execution have been going up substantially. So I think going forward, the focus is definitely going to be on execution, and you will see that by the end of March, we will be back on our growth path, and going forward with a strong order book, the average tenure required to execute this order is 2 to 2.5 years. So you will see this flowing, all these orders getting converted into execution. And even I'll just like to briefly touch about the order book also, that currently in this year we are at 4,000 crores, and given whatever bids we have already made and we are well placed, we will be well on our guidance of 5,000 crores for this current year also.
Okay, now in terms of receivables, how has the landscape improved? What portion of the total order book is government receivables and related projects?
I think most of our, if you see in the 9-month period, all our billed receivables, they have been at par. They have not increased. Now, as far as government receivables are concerned, currently our order book, 84% of the order book is from the government sector. So what, Varun, I would like to highlight here is that most of our orders which we are going, we do a thorough due diligence before bidding also. And if you see the quality of our order book, most of our orders, they are backed by either a multilateral funding or it could be a sovereign funding. So if you look at the total order book, it's totally backed by this thing. So going forward, we do not foresee, that, our receivables will be an issue since we are doing majority of the business in the government. Since the financial tie-up is already there, the financial closures have happened for these projects, and we don't foresee any challenge there.
Okay. Excuse me. Great. Thank you, Mr. Chopra, for joining in and explaining the third quarter numbers, as well as, of course, what it's looking like for the order book, of BA Tech Wabag. Pretty strong at that one. Well, from one corporate to another, Emami has delivered its third quarter numbers, double-digit growth guidance, but this time around volume growth is a bit subdued. So let's bring on board Mr. N.H. Bansali of Emami to talk about these numbers. Thank you so much for joining in. Mr. Bansali, the volume growth continues to be a bit subdued. Comparatively, your peers, or maybe you could say companies in a more or less similar category, still seem to be doing a bit better. So what's the reason for this slower volume growth?
If you look at, we have performed reasonably well. In fact, excluding the winter portfolio, our volume growth is around 10%. If you look at Navratna range, pain management, Cash King, 7 all-in-one, and international business, all have done exceedingly well, except for the winter products, winter care range, kind of Boro Plus, because the winter, in fact, delayed, and also there had been a lot of wettiness and intermittent rain. So this impacted the skin care range of us, where if you do not have the dry skin, then it impacts the skin care kind of a Boro Plus business there. Though the market share has increased substantially for all the products. And the other brand which has been impacted is the male grooming range because of its discretionary nature and some change in the trend which is happening on the male grooming kind of a beard has now become a new style. So it has on the cream side it has impacted.
Like you mentioned, delayed winters have impacted your top-line growth. What are the other factors leading to this flattish top-line growth? And, have these challenges continued in the fourth quarter as well?
As I said, the performance has been good despite all these challenges. We have been able to post, despite a decline in the BoroPlus range, which is essentially a winter care product. And in the winter itself, if the winter is not right for our kind of products, despite this, we have been able to show a kind of a flattish growth on an overall basis. That has come from all other brands. And so I think going forward, we are expecting in the fourth quarter and the times to come, we expect good growth to come. Having said that, there are headwinds, kind of the liquidity crunch still continues, and the market challenges continue for all and for us as well. The rural is not as good as we were expecting. In fact, it is yet to pick up. So rural liquidity concern and the overall economy mood has also impacted. So that is there for us and for all and for us as well.
Now, margins are flattish, and I observed that ad spends have been higher, especially on new launches. So, and you have more launches as well coming up. So, will margins continue staying at these levels?
So our gross margins have improved in this quarter. In fact, it has improved by 120 basis points compared to the same quarter in the last year. And we have spent around 110 basis points of higher advertisements on an overall basis compared to 129 crore in the previous year to 138 crore. So despite this, we have been able to, our profit after tax has grown by almost 6% at 146 crore for this quarter. So this has been, that way, the margin has improved. We are investing behind the brands. We are investing behind the new launches as well. We continue to invest behind the new brands because we feel that that's the future. We are not putting any restriction on the new launches wherever we find there is an opportunity.
Okay, now, you've guided for double-digit revenue growth for the fourth quarter. Is this largely going to be on account of the low base? What's going to help you? How will you achieve this? And which segment will drive the growth?
We expect a good growth because the underlying tone is very good and the market share of all our products have increased. And so we expect to continue with the same trajectory, and we expect a good growth to come in. It's difficult to precisely say whether it is a double digit or a single digit. And also on the top of it, the international business has also done very well. So Bangladesh has grown by 36%. CIS, Russia has grown by almost 15%. And our Africa has also grown by around 20%, and the new acquisition which we had done of Cream 21 is also doing very well, and we expect a good growth to come in from that as well in the last quarter.
Okay, great. Thank you, Mr. Bansali, for joining in on this edition of the show on ET Now and telling us what went by in the third quarter. At the day's low for Emami Limited. We'll take a very short break, but don't go anywhere. We'll start highlighting the big movers and shakers of today's trading session on Market Fatafat. Welcome back. You're watching Market Fatafat on ET Now. Let's bring on board Mandar Jamsandekar of Precision Technical Analysis to walk us through the technicals of individual stocks. We also have with us Varun and Soumya. Afternoon, everyone. And let's kickstart the show with the auto stocks because that really has been the one sector that's facing quite a bit of drubbing because of earnings and because of the not so great SIAM data as well. Dismal Q3, and that's really disappointed the street. Poor profit performance as well by M&M. And as you can see on your screens, the stock has just been on a one-way downward journey. It's at the day's low, 532, 6.5% gone. And Mandar, along with the auto stocks, it's also metals that's not exactly supporting the markets today. Among the top sectoral losers, Mandar, anything that you would like to observe on Vedanta?
Mubina, see, for the last 5 months, Vedanta has not done much. It's trading range bound. On the lower side, 130, 135 has been a support. On the higher side, 155, 165 has been a resistance. So it's been trading in this range bound for the last 5-6 months. And in the intraday trade today also, there is weakness. The stock is trading down by 3%. But near to support. So a swing trader can use these levels to execute a swing trade. So buy on supports, exit as and when the stock moves towards the resistance. So that's a trade which is possible for now in Vedanta. As from an investment point of view, I think it's still wait and watch.
Okay, weighted watch when it comes to Vedanta, 3.5% down. Most of these stocks, in fact, are at the day's low. But on the flip side, we have a Godfrey Phillips, resilient as ever. Vinny, what exactly stood out in the quarterly results for this one?
Mobina, let's look at the results first, the breakup of it. Like you're looking at the profits, they are up by around 40%, which is quite good for the company, as well as the revenues from the tobacco business has done quite well. Also, the overall revenues are up by around 40%, while the margins have seen a 300 basis point expansion. So, Godfrey Phillips has done quite well in this time in this quarter. They have been performing well in the last couple of quarters as well. So this is one stock we'll surely keep on our radar and see how that performs even going ahead.
All right, that's Godfrey Phillips for you. And keeping it with stocks that have been resilient in trade, Mandar Trent Limited delivered its third quarter numbers. We saw a steady uptick come by. That continues today as well, 5% of gains. Where do you see it move from here on?
Yeah, rightly said, Mubina. See, the stock is showing strength, and that too in a weak market like today. But if you look at the long-term chart, the stock has been trading in a nice uptrend for the last few years, and that continues. Now, when I look at the short-term chart for the last 2-3 months, the stock was trading range-bound, was trading between levels of 500 and 570, 580 on the higher side. And yesterday itself, that is Friday itself, the stock managed to generate a fresh breakout. So this tells me that the stock has got more legs to the move that it's showing us right now, and quite possibly can witness a 10 to 15% of upside from current levels. So around 750 to 800 should be the target in this move that the stock is showing. The stop loss for the trade will be at 570 for a long trade. And the strength is going to continue.
All right, so perhaps more room for an up move for Trent Limited, gaining 5%. And keeping it with strong result reactions, Varun, UPL, it's our earnings dhamaka of today.
Right, Babina. So a really strong show from them this quarter. Revenues inching up to nearly 9,000 crores. But the key differentiating factor this quarter has been that the EBITDA run rate has finally fulfilled and come through at around 2,000 crores this quarter. So you're looking at an 8,000 crore EBITDA figure for the year. What that does is it's far ahead of street expectations by around 15%. And what it'll do is it'll enable the company to pay down around 3,500 to 4,000 crores of debt next year. And if that trajectory can continue, you're kind of seeing this balance sheet free up from debt completely in 5 years. So the EV is going to compress, which allows basically for your multiple to re-rate. So on a whole host of different things, it's really positive quarter for them. A key market for them, Latin America, which has 30% of revenues, grew by 20% this quarter. And it's been the highest ever EBITDA margin, second highest ever EBITDA margins for the company at 24 versus 25%. So broader indices not doing that well today, but UPL definitely holding its ground.
Yeah, among the top Nifty gainers, in fact, the few top Nifty gainers today in trade. And Mandar, keeping it with those spots of green that we are seeing on our screens today, DMart, record-breaking rally here, another day where we are seeing the stock just about trade at levels of 2,400. Where can it go from here?
Mubina, see, DMart also has been a very strong performer, and it's been performing for the last 2.5 years. So that's a positive sign. Now, when I look at the long-term charts, the stock recently managed to break past the resistance at around those levels of 2,000. And when it did so, it had a target of 2,600 on the upside. So I think the move that we are witnessing right now, 5% up in the intraday trade, the stock is heading towards that target of 2,600. So that should be the target where we could see some kind of profit booking happening. But for now, the uptrend is going to continue.
Okay, so yes, perhaps more legs to this rally that we are seeing in Avenue Supermarts, according to Mandar. Bharat Forge, meantime, again, a result reaction, auto stocks not doing well today. And, I think what's putting further pressure on Bharat Forge, apart from its third quarter numbers, is also that North American Class A truck data, which again has been in the red. It has been so for the last many months. Now, when it comes to numbers, a 26% decline on the top line, coupled with a 44% fall on the bottom line, because the margins as well have compressed significantly, almost as 700 bips compression in the margin. So a sharp fall seen across the key parameters for Bharat Forge. In fact, stay tuned to ET now. We will be connecting with the management at 2:30 to understand what went wrong and what can we expect from here on. Okay, but with that, we're out of time. So Mandar, Varun and Vinny, thank you so much for joining us on Market Fatafat. Stay tuned, folks. Closing trades is up next.